But you have to treat it as a business. There's no other way to say it is a game. Yeah. It's a game of probability, but it's not gamble. Except you choose to be a gambler. And more than 70% of people trading, they are gambling. Well, my first interview with Justin Sen, when he had one-on-one interview, excuse me, on Zoom, the first question he asked me was, what is your risk management? That was the first question he asked me, because I told him what happened to me. I told him, he said, Kai, what I did is not sustainable. He said, what I did is not sustainable. That if we had met earlier, while I was still in that business, he would have asked me to stop and find a way to start refunding people's money back to them, or reduce the interests drastically. And only those who have investment mindsets will stay, because that will filter the system. As at that time, we've lost money. So he asked me, said, what is your risk management? Do you know, I've been trading for 2 years. I don't know what risk management is. I'm telling you. I don't know what risk management is. And me, I'm someone that if anybody asks me a question, even if I don't have an answer, I have something to say. I've trained myself that way, that if somebody asks me a question, even if I don't know it, I have something to say. And something I will say must make sense, even though it's not the answer. But do you know, for the first time, I don't know what to say. So when, after some seconds of silence, he said, my friend, you are gambling. That's what he told me. He said, you are gambling. He said, stop trading. If you are still actively trading, stop trading. Then you need to unlearn what you know. And then that was when I started learning trading afresh, after 2 years of claiming to be a trader. And burnt down resources, burnt down money, burnt assets. My wife used to have a school in Abuja. Trading took that school away because of gambling. A one-story building. That's why I didn't give up. Yeah, that's why I didn't give up. Some has given up. That's why we are here. And whatever it has taken, he's bringing it back. So risk management is part of it. In fact, I told you, trading psychology is 85%. If your setup is wrong 6 times out of 10, but your risk management approach is 100, you will still come out a winner. And risk management is the most simplest thing to teach, but the most difficult to apply. Are you following me now? It's the simplest to teach, the most difficult to apply. The chart is the most difficult to teach, but the easiest to apply. I mean, some of you are still trying to catch your breath around the charts. You are still trying to know where your key point is, what to do, when to place the trade. You are still seeing the chart. You are feeling confused. You are seeing a bearish trend. You are still calling it bullish. It's the most difficult to understand, but the simplest to do. Just click the buy. Just click the sell. Simple to do. But this one, easy to teach. Everybody can understand 1:2, 1:3. Everybody can understand. Be patient. Be disciplined. My wife closed a trade halfway yesterday. She opened and closed. I said, don't train yourself like that. Are you following? I have to tell her, I said, don't be that kind of a trader. That's what I'm still healing from. Because that was the kind of trader we were. We don't wait for, like, let me use an illustration. I have a trade that I'm picking here. All right, my stop loss is here. I have an opportunity for the price to come back here. The moment price got here, I take profit. Look at the potential. Look at where I'm exiting. Why did I exit here? It's trauma. I'm still healing from the trauma of $200,000 loss. It's trauma. Trauma of poverty. Time in trading. Many times. Where trade will go halfway into profit and then collapse back into stop loss. You will see it many times. There is no way to beat it other than have a disciplined human behavior. And what is a disciplined human behavior? You have to approach trading like you are a robot. If trade hits my, once I initiate a trade, if trade doesn't go to profit and go straight to stop loss, you are ready to accept it, right? So why not also accept? Our psychology has been twisted that we hold losses, we close profit on time. When trade is going on losses, you want to hold it. But when trade is in profit, you want to quickly exit. But it should be the other way around. And the liquidity provider understands this psychology. The money makers understand this psychology. Because also it affects them too. So you have to be disciplined that once I place this trade, if this trade goes halfway into my targets, I can close partial as, what do they call that thing? Immediate gratification. I can close part of it to fulfill my desire that I have already made profits from this setup. Then I set breaking even and leave the rest. You have to train your mind for it. You have to train. That's why using demo is the best process. I'm telling you. Using demo is the best. We didn't do demo. We went straight into live. Straight into live. My first $100 first made profits. But the second day, bah, the market took it. But because it made profits, and I said, I can do this thing. So I borrow money from Branch. Who know that app called Branch? They can't borrow me money again. They have been blacklisted. They shut down. What I'm saying is, that was 5 years ago. Was it 5 years ago or 6 years ago? 6 years ago or so. Oh, you are owing them. Before Forex deliver you. So I borrowed money from my psychology in a very wrong way. Now, do you know? Okay, maybe today will now be for that story. Do you know that, sincerely speaking, it looked like I was making progress, but I was not. It looked like I was making progress. So I will borrow again. Sometimes I will not be able to pay back. I will collect salary. I'll put it. Collect money from my wife's school. Put it. Do the trade small. Return it. They take off and on. So it looked like this thing was working. Then we now started collecting money from friends, neighbor, for trading. We were giving them interest. 20%. When I traveled to Dubai for one Forex Expo, and we were discussing with some analysts, and we told them what we're doing. They said this thing is not sustainable. Said you will get into trouble. But as at that time, it wasn't looking like anything was going to happen. That this thing is not sustainable. In this industry, no matter how good you are, you can't place people on 20% interest per month. What hedge fund? Hedge fund is giving their investors in 2 years. The people you are contending with in the market, they are giving their investors 20 years. You are giving them in 1 month. He said it's not sustainable. So, what is this guy saying? What is this guy saying? When it happened, I know that. One trade can just wipe $10,000. My cousin, one trade in my eyes, losses of over $150,000. And he needed to pay people. He was still holding the trade. He needed to close some so that to be able to initiate withdrawal, you have to close some trade on losses. You have to close $50,000. So trading without stop loss, trading without psychology is a very dangerous, very, very dangerous thing to go into the market with. Your setup, I'm still repeating it, your analysis, your setup may not be so good, so polished. But if this is good, you will always win. Always win. You will always win. That's why when I check everybody's trade, I'm seeing those progress. I say, oh, yes, you are doing fine. Despite the fact that you had trade that hit stop loss, your account is still making progress. The one who turned 5,000 to 13,000, I said, no, this is gambling. Yeah, that's not trading. That's pure gambling. Because when did we open the account? Even if we're doing aggressive trading, it's still gambling. Based on what we are doing. If that is real money, I'm sure you won't be able to do that. Yeah, I'm very sure. I'm very sure. So let's do something again today. Let's look at 1 or 2 charts. We analyze it. Gold started surprising us again. So I'm already changing my bias to be looking for buy on gold. So sincerely speaking, anything you can do to start making money in dollars, please do it. In this our economy, anything we can do to make more money in dollars. Excuse me. Okay, so this is gold. Gold is already giving us, it gave us a bullish bias this morning. Since yesterday, gold has been buying from this low, higher high, higher low, higher high, higher low. So it's in the new high now. So what are we anticipating? What do we expect to happen in gold now? What do we expect to happen? We should be looking for how we can buy gold back to this place. Back to 1590. That's our idea now. To look for how we can buy gold back to this place. So we already missed the buy that started this buy around 2 a.m. in our way. Started around 2 a.m. Rejected here for a long time, and then started going up. So now it's ranging where it is. We are going to now consider buying this gold higher. What are you supposed to do? We go to microstructure. It's not a time to buy actually. Except you just want to do, you just want to enter ahead and risk money. It's not a time to buy. So because gold, it went up this way, pull back, it's supposed to go higher than this. Now it's just there. So let's wait for gold to maybe go up a little. All right, pull back, and then it's a long journey. The journey from here to here is about 700 pips. So waiting for it is not bad. Or you allow gold to take out this low, it comes back using any of these moving average as support, then you buy. You use the base as the stop loss. The idea is always to buy cheap. Don't buy high, buy cheap. Yes, buy it cheap. Buy it cheap. If you open a buy now and put your stop below here, there's a high probability that it can fail. It can come here. Take it away and then now use your stop loss as support. So 2 things we are waiting for here. We want price to do this for us. This lower time frame, so you can do it quicker. We want price to do this, come back, then it will do this, go up, give us a low around this area. By that time, this moving average will already be there, using it as support. Then look for your buy near the moving average. look for your buy, put your stop loss below the lows. Then we take it up here. Let it be your trade for the day. Or if it doesn't do this, we allow price to do this. Come down here. So when gold returns back here, you will now be looking for candlestick confirmation. If it's coming down like that, watch out for the candlestick. Make sure the candlestick are exhausted. Exhausted means they are active, but they are not in control. They are not LD candlesticks. They are small. Then you now see a bullish candlestick that is very LD, very solid, elephant bar, showing a sign that the buyers have stepped in again to control the markets. You know, I told us yesterday that this sell, I'm wary of it. Remember, I said I'm wary of it. Why? Because of these candlesticks. Those candlesticks, they mean so much. It means that buyers came in strong. Look at this candlestick compared to this. It's like when elephant is moving, boom, boom, the whole place is shaking. That was what they did here. Now, compare this move to this move. This move here was take profit. It's not a seller stepped in. Look at the candlesticks. It was take profits. Many traders don't understand this. Yeah, I learned this when I was in CDU. So this was take profits. Then they stepping back and took it higher. So we want to look out for more buys. Just a perfect way to enter is what we are looking for. Let's allow price to retest, to come back here. All right? Let's allow price to come back here, then we buy. Let it come and test back this area. So we buy from here. Or it goes up, it comes back to do a higher low, then we find our buy. Not now, because it can still range for some time. Let's look at another asset that we can. Okay, somebody tell me which one do you want us to check? Which one is your favorite? Tade, which one is your favorite? GBP USD. GBP USD that burns my finger. Spread? No. No, GBP USD is one of the very good assets to trade. Spread. And maybe because it's standard account. No, it's one of the good peers. So at least among currency peers, Euro USD, GBP USD, USD JPY. Those ones they don't have high spread. Any other one, they are bigger. USD CHF is wide. USD CAD is wide. Then people trade GBP JPY. GBP JPY is like gold, though. Yes, it's heavy like gold. Heavy like gold. What can we do here? What should we do? We should buy. Samuel say buy. Buy. He said we should buy. Should we buy? Samuel said we should buy. Sam, it's not a buy. Look at now. See, it's even giving you a healthy bearish trend. See the recent low, lower than the previous low. See the previous high, higher than the, you see, so it's still a bearish trend. It's not a buy. It look like a buy because he is like this. No, you don't buy. You find your sell. You find your sell. Our sell is somewhere here. First stage to sell. Then second stage to sell is here. First sell, second sell. First sell, second sell. But someone need to explain to us why he said buy. Why did he say buy? Yeah. But it has even broken that range. Oh. Look at it. It has broken that key zone. See it. It went lower. If you go to a higher time frame, it could be a liquidity sweep. But that's not a reason to buy. If you are buying, then your buying you are trading, you are counter trading, which can reverse later on. So we should be considering buying somewhere here or somewhere here. Sorry, sell. To allow price to come higher, then you short back. The reason why we want a bigger space for our setup is that we want good reward. Good reward. If it comes back here, reject around here, our stop loss will be here, take profit should be here. That should be about 2.53. You are a retail trader. You don't need to be looking for setup that will take you into 3 days, 4 days. Look for setup that can end today, but good setup. All right? Good setup that can end today. That's why we always switch to micro time frame, micro structure. If it starts selling from here, no shaking, let's leave it. We miss it. Don't say, Kai, I will have entered here. Leave it. Allow price to come to your zone. Allow price to come to your zone. Don't chase price. There will always be trade that will come to you. There will always be trade that will come to you. Not all trade is your trade. Do you get it? Not all trade is your trade. Yes, not all trade is your trade. Some people may already be seeing sell here. But if it is not your setup, you can't see it. So allow trade to always come to you. I can tell you that 4, 5, 6 out of every 10 setup will always work in your favor. Have that at the back of your mind, that for every 10 trade I'm picking, I know 5, 6 will work. And if the regime favors my regime, 7, 8 setup will work. But don't think 10 over 10. No. Don't think 10 over 10. Don't think 10 over 10. Rather, if you are going to be thinking 10 over 10, be thinking towards risk management. Your risk management must be 10 over 10 or 9 over 10. If I'm picking this trade, let's say trade returns back here now, and we pick our sell from here. We sell from here. Our stop loss is somewhere here, and we trade back here. Look at the reward, 3.5. So out of this 3.5, you just say you want to take 2.5. Do you understand? You want to take 2.5. That means you are not catching the entire move. And that helps you. Because price can shock you. Go halfway and then decide to go back. But by that time, you are out. I hope somebody is following. Think psychologically. Trading is more psychology. You are not there to catch all the $5 trillion that is being transacted every day. You are there to just catch your own little peeps. And once you catch it, remember God. And go and give your covenant offering. Amen. And we need the money in recreated life. Because we want to move faster. One bishop said, money shakes the heavens and the earth. Bishop Oyedepo. Money shakes the heavens and the earth. So we need the money. So that we can shake heaven and shake the earth. We need the money in dollars. So we have done 2 setup now. We've done gold. All right, so look at gold now. Are they being at Wale? We are already on drawdown. Wait for your setup to come. Wait. Now, he went beyond this high. Then he came back on it to test it, respecting it. We are waiting for it again to test it and respect it. If it fails, then we wait. If it fails, we wait for price to come back here. All right? Is somebody following now? Farouk, are you looking what I'm saying? I'm not sure. You didn't see what I just said now. Where are we going to go and wait for? From where? From here? This one? Your mind is not here. No, that's why I saw you. Your mind. I said if it fails here now, if it doesn't respect this zone, then we are coming back here. This is the next zone. If price doesn't get here, if you go halfway and return, look for buy above here. Just make sure you are trading within your zone, within your zone. Trade within your zone. So maybe before we finish, we'll find our setup on gold. GBP USD. Okay, so we said we want price to come up here. Then we sell back here. Let's look for another asset. This NASDAQ. I'm not sure many Nigerians trade this. Those South African guys, they are crazy with this thing. This is one of their best peers. People have even moved away from it. People have started trading more of gold now. But that time it was NASDAQ and GBP USD. There is one champion in South Africa, Dr. F, that we used to follow that time. This size, best peers. I don't work up with this Forex. So, Kai. Dr. F. He has gone into oblivion now. Because of risk management. He was so confident about his trade that when trade gets to the place you want to trade, he will design that place with entry. He can have, like, I'm not exaggerating, he can have like 500 entry. Let's say you want to buy here now. it can be loading it like loss side 5, like 500. And you know, small movement is in profit, massive profit. A broker will not allow you to take loss like 5,001. That's one. Number two is that you have to close some. You want to close some profits. Why the idea is they will close some and leave some to run. You understand? Do you get that idea? So that they will close partial. So they will leave those ones in case the trade still want to go far. Then another reason is that, you know, when price is in a place and it's not yet in your entry, it's not yet in profit, as it's going draw down, what they are doing is what they call martingale layer. Martingale layer is, as it's going against you, you are still filling it with order. Filling it with more order. Then price will now start rising because you are sure. That's the idea. You are sure that price will rise to their level. It was a fantastic trader, but now we don't hear of him again because I knew he had issues that time. Okay, so let's look at Nasdaq. Is it tradable? No, it's looking rough. Allow price to get back here, then you short it. It's looking rough. I don't like to trade any trend, any asset that is not trending cleanly. Avoid it. Except price returns here, then you short back. Is it making sense? Yeah, price returns here, you short back. GBP JPY, another popular trend, popular assets that people trade. Okay, we already marked some zones here before. Maybe during the week, I can't remember. And look at what price is doing. Okay, I think it was buying that day when we marked this zone. For it to go. So can you see it's back here? So we are expecting rejection somewhere here. So can you see now that what is it doing right now? What do you think it's doing? It's been consolidating, but inside that consolidation, we are seeing a trend. Do you know that you can continue to do this for the next week? Go back here, sell. Go back here, buy. You can continue like that. You can't predict what can happen in markets. So we find sell. This is AUD JPY. Yeah, this is buying now. This is buying now. And it's likely buy back here. It's likely it's going to buy back here. So it's currently at this, it's currently here. So a break above, the next target is here. Sir? Okay, the 20. This is the JPY. Can you see that microstructure is already giving us another view on it? So here in microstructure, what you will have to do is for you to wait for it to come back somewhere here. You allow price to come back to somewhere here. Find your buy around here. Find your buy around here. CHFJPY. Is this a buy or a sell? I know. Is it a buy or a sell? A sell. Why do you want to sell? How is it going bearish? Okay, red. Are you looking at this candlestick? Okay, so let me hear you. Breaking this, you mean this area? It's not breaking it yet now. If it's breaking it, it has to break it outside. It has to come here. Is she correct that you want to sell? Who is going to sell with her? You want to sell with her? Oh yeah, two of you should open sell. Two of you should open sell now. It's demo account. Oh yeah. Who want to buy? Who want to buy? Oh yeah, those for buy. Let's buy. Those for sell, let's sell. Let's see who is going to win the race. CHFJPY. So let's see who is going to win the race. He's saying sell. So those who want to buy, why will you buy? Dominion. Okay. Now. Good. Very simple. See, price has been trending high. This is a bullish ride. All right. It broke this level. Now it's coming back to retest it, using it as a support, and then using it to form its higher low. Do you understand? Is now using this level as a support. So I don't think you should sell. Do somebody understand it? Do you understand why you shouldn't sell? Look at, let's go back to higher time frame. In fact, this is 4 hours. It collapsed. All right, it was bullish before. It collapsed. It ranged, and then now it's expanding. It has expanded. Look at the candlesticks. Great, solid, bullish candlestick. We mark this key zone. It broke the key zone. Ideally, when a level has been broken, there's always what we call a retest. Retesting back that zone and then using it as a support. If it is below, if price is below it, we come and test it to use it as what? Resistance. It was previously a resistance. It broke it. Now is on it as a support. So you should be looking for a buy. This buy fails when price breaks below this level. Sir, that is where it fails. So what he's doing now is just like he's doing higher high, higher low, higher high, higher low. Now he's doing a low of the high. Do you understand? It's doing a low for the high that he just made. So we should look for a buy, not a sell. Even if you are going to sell, you can't sell here right now. If you are thinking of a sell, it's not yet to sell. You can't sell here. Because if you are considering a sell, that means you are selling low. And the rule is don't sell at low. You sell at high. Do you know where you can consider a sell? If price bites back up here and rejects around this area, you reject back, so you are selling somewhere here to collapse back. But right now, it's not a sell. Do you understand the explanation? Right now, you can't sell. Ideally, you shouldn't sell. When you open the chart, don't focus on the immediate candlestick. Focus on the trend. Yes. What was price doing before it arrived where it is right now? Okay, price was forming a bullish trend. So what is it doing now? I am assuming it's doing a higher low. It's an assumption. So now I go to a lower time frame. So I'm waiting for price to give me some bullish confirmation. And then I find my buy around here. Not time to sell. If I'm going to sell, price must break low below here and give me a lower high. My sell might still also be somewhere here, but I can't enter now because this is low. What if we start reversing back from here? Does it make sense? If you don't understand, say you don't understand though. Don't say it makes sense though, when it is not. This is AUD USD. I don't see any setup here actually. Yeah, I don't see any. There's no setup here. There's no setup here. What will you do here, Samson? Euro JPY. Okay. I like that. You see, he's already, one of the things you must understand in trading, you have to start building something you understand. If you're on 4 hours time frame and the chart is not looking meaningful to you, switch to where it will make meaning to you. So I like his first approach. Move to 1 hour, please. So if he goes to 1 hour, maybe he can understand, he can see something that he can trade. So this is 1 hour, sir. Okay. Okay, good. Okay. Okay. It has ranged for a very long time. Good. All right. Yes. AUD CHF
And we were similarly doing the same thing. All of them were. Nobody knows.
Now, very important observation. All the peers that are trading with USD, there's a higher probability that they will be doing similar thing. All peers that are trading with USD JPY, JPY, they will likely be doing, light will destroy the power bank. Oh, okay. Okay, I see. Yeah. So let our internet come up. Is it up now? Okay, now look at the AUD JPY. Collapse range. This one has broken out already. It's already moving ahead of others. Now look at this one. It's already ahead of others compared to GBP JPY. This is another way to trade though. Pairs that are similar, you can look at what they are doing. Now, if, for example, look up USD JPY, Euro JPY, GBP JPY, NZD JPY, AUD JPY, CAD JPY, CHF JPY. Which other JPY? Now, when if you check these charts and they are selling, Shadi, can you try? What does it mean? All these charts and they are selling. What do you think is happening?
They are all selling.
What do you think is happening? OJ, if you check all these charts and they are all selling, like they are collapsing like this, we'll check all of them. You see that all of them did this. All these peers now, you will see that 90%, almost all of them will be doing this. What happened here? So if you see them doing this, what is going on? Look at those currency pairs. Yes, my wife wants to try. Today's her birthday. JPY is stronger. JPY is strong. Even if any one of them is now, let's say SND is stronger than GBP, CAD is stronger than USD, but this guy is stronger than all of them, he will be crashing. Do we understand that? However, the rate at which they will crash will now depend on the strength of these guys. They call this one base currency. They call this one quotes. This is base, this is quotes. Base, quotes. Base. Do we understand? Before, I used to think this one is quotes. Why this one is based? It was in UAE. I was teaching a group of students. So while I was teaching them, I was now mentioning this one as quotes. While I was mentioning this one, but there is one Afghanistan guy. Yeah, that guy used to go and find out everything. You know, he saw the way I was teaching without book. Anything I say, you will go and Google it. Anything I say, but I love what he did. He respected me so much. He said, after I finished, he said, Yoel, come. It seems you are mixing something up. This one is the quote, this one is B. I said, show me. And he showed me. So ever since, I'm always calling this one quotes, calling this one base. But this is base, this is quotes. So once the quote currency is strong, price will be collapsing. Now, what I'm trying to say is that the rate at which it will be collapsing will now depend on the strength of the quotes. The weakest of them will collapse more. The one that is a bit strong will be collapsing, but it will be taking time. Do we get that? Sir? It doesn't affect metals. It doesn't affect commodities and co. For example, sometimes if dollar is strong, does not mean that because GBP USD is selling, Euro USD gold will also selling. Gold can decide to go nuts, yeah, on his own. Can decide, oil can decide to do his own. Those ones, they are operating at another level. Commodities are mostly moved by data, by events. Do we understand? Currencies are mostly moved by interest rates. Interest rate over time, they respond to their interest rates. And the reason why many people avoid currency pairs is because it goes up, it goes down, it goes up, it goes down. You can see it can rise up now. You will think it will continue to rise. It will start collapsing. Why? Because each country are trying to say, no, you can't. For example, now our Naira too is doing well now. It's recovering, but me, I'm not happy. Yes, now it's making $1 to be 1,003. And dipping, it will now make things to be cheap. But our marketers, they are wicked. They will still be selling bread the same amount when flour money has reduced. That's why our country is not growing. We are selfish. That's why you two have to be selfless. Selflessly make the money so that you can afford anything you want to afford without looking. When they say something is 150,000 naira, you just ease because you know it's 120. That's the level we should be aiming at. They tell you, this thing is $500,000, $500,000. You don't have $1 million, $300, $500,000. Okay, so back to what we are saying. Gospel was pointing our attention to something. That's the correlating pair. You see them almost doing the similar thing, and that's what we saw. So that's one of the things you can do too when you are doing your analysis. Check what they have been doing. Check what the similar pairs like GBP USD, Euro USD, AUD USD, SND USD. Which other one? I think those are the same one in the same category. Then there is USD CAD, USD CHF, USD JPY. Those three too. I think they always also move in one way. I'm not too familiar with them anyway. Where were we the other time? Which pair were we looking at? Okay, now see what is happening in all the NPS. Right now, they are selling. Look at right now. Look at this one is even selling more. Can you see? You see? The card is looking like it's among them is looking stronger. That's why it's resisting that sell. Look at dollar too against it. Now it's like we did this analysis one day, and it has been buying. You know, we said a retest will buy. It didn't get there, but from here started riding. So did we miss this trade? Yes. We missed it. Even if we're waiting, we were saying let it come back here, but it didn't get there. It will happen sometimes. You miss trade by a few pips. Let it go. Don't chase price. Allow price to come to you. So let's begin to round off for today. Yes, don't chase price. Let price come to you. Look at gold now. Gold went back to 4,009, not quite long. Yes, sir. Yes, sir. Yes, sir. It's possible. It may not come there and not even come there until another season. So what will happen is once you miss it, now go for the next pullback. Yes. Wait for it at the next pullback. Because once you mix that level, it will do higher high. Then wait for the higher low. Yes, gospel.
Right.
We've answered this question now. Once your price hits stop loss twice, it tells you something straight away. Price is ranging. And once you start breaking like that, it's ranging. Yes. That one is manipulation. There's what they call it's still ranged before expansion. Do you understand? That means you enter too early. It's manipulation. There's what they call, I don't want to bother us with those things. There's a concept they call Agba trader. There's what they call accumulation, manipulation, and distribution. Now, I don't like to go into all of these things. Sir? And since I've mentioned it, let me just say it. Now, what happened is this. When price is ranging, let's say you want to go bullish. What is happening now is what they call accumulation. That ranging is accumulation. So once you enter, it breaks a level that you have marked, and then it breaks it back again. It's accumulating order. It's going to move. The next thing it does, let's say it's going bullish, it will first do something like this. You think it has broken down, that you want to start selling. This manipulation. Then it will now go like this. Then it will come back. Distribution. It will now distribute money. For those who were waiting for it, it will share the money to them. It collects money from these people and share it to this one. Accumulation, manipulation, then distribution. I'm telling you, the best concept to always wait for, mark your key zone. At most, be patient for, let's say, liquidity sweep. That's the best. Mark your key zone. Allow price. What we always do is that, but that one we make you to be missing trade, some trade. Let's say you have marked your key zone. You want to sell. Always wait for price to do as if you break it and return immediately. So you can use this place as your stop loss entry. This presently one of the finest setup now. Mark your key zone like we are marking. Mark the key zone. Then wait for price to break the key zone and return immediately. Like a rejection. Instead of price not getting your key zone like that USD JPY that didn't get our key zone before going. Look at what happened. We mark here that we want price to get here. Look at price didn't get there, and then it left. Now, what we are saying is allow price to actually come into that your key zone and then enter as if he broke it. Return. Then you enter here. Entry. Then stop loss. At that rejection. One of the finest setup. Especially if you see that rejection, that liquidity sweep on 4 hours time frame. Oh my God. If you can hold that trade, I'm telling you, it's one of the best setup you can always have. If you see that liquidity sweep on 4 hours, you will hit that trade hard. Except you have not mastered your psychology well, that you quickly come out of trade. If you see it on 4 hours, no. It does wonder. So can you remember what we are waiting for on gold now? Who remember? Which position now? Or who want to sell? Who want to sell gold? Moving average is not just what we are looking for now. Because we can't trade moving average in isolation. What we are waiting for now is for gold to come back here. This area. If it doesn't come back here, then it reclaims, it closes above the 20. If it reclaim back 5,000 and closes above this 20 moving average, that means it's closing above this level, then we can buy. If not, this is our buying area. Buying between, it's not a zone. It's not a zone. Don't trade moving average in isolation. Don't trade moving average in isolation. But it's not a good thing to buy. I'm sorry, to sell now. Don't consider selling gold now. It's not ideal at all. Except gold actually collapse and come below this one. Then we can sell back here, sell back here. But I don't think it's ideal now. So we allow price come here. Then we try buy. Then that buy, this is not take profit. Oh. Take it higher. Then you can put TP1 there. Take TP1 here, this high here. Not this zone. This line I mark here is just a temporal high for this. Now, what it did here is similar liquidity sweep. It's similar to liquidity sweep, all right, for short-term sell. So gold might likely return to this region. So everybody just pay attention to gold today. Once gold come here, but I don't want everybody to be trading gold. I don't want everybody to be doing the same results. Yeah, I want everybody to be dynamic. I want everybody to be trading different things. So not everybody, and if you are going to analyze gold, analyze your gold alone. So both of you will not go and buy, then the market will sell. Yes, I don't want us to lose money in two ways. I think we are done for today. Any question? So spend more time doing analysis today. Spend more time doing analysis. If you don't go on the system to do analysis, you will not be able to see what price is doing and have trading idea. Don't just rely on what we are doing now in the class. When you are done, do your personal stuff that you need to do. Analyze. Look for trade, but don't force trade. Allow price to come to you. Yes, sir. Yes, they are all moving averages, sir. Okay. Sir, the moving average, don't let it confuse you. This is my whole personal setup. It's not compulsory you use all of them. You can just put 50 and 100 or 50 and 200. It will still give you the same thing. Now, it is called, that 50 now is called 50 days simple moving average. What it's telling you is the average of the price movement in the past 50 days. Then if it is 20, the average of price movement in the past 20 days. If the past 20 days have been bullish, you will see it curving up. If the past 15 days have been bearish, you will see it bending down, 50. That's why you will see that the 20 move faster, followed by the 50, followed by the 100, followed by the 200. Because this is 200 moving average. Do you understand, sir? The reason why I'm putting the 4 is because Nikoloye. Yes, it's telling you what has already happened. So now the application is now what differs. So it's not necessarily you put all the 4. In fact, make sure your chart is so clean. Don't overload it, because there's what they call analysis paralysis. That means you put too much of indicator and then you become confused. I wish I still have access to that our indicators we used to use those days. Those indicators we used to use in Sky Flow. They are all computer, they are all automated indicators. So you will not see candlestick. You will not see the candlesticks. Are you saying 8? You didn't say 15. we have name for them. With different color. If you have the one that they call bat. But Kai, that is zero they produce. We still have indicator that is showing us buy said, then the one that shows us the strength of the currency. If dollar is strong, it will tell us. But it's a lagging indicator. It's telling us what happened to dollar few hours ago, not what is happening to dollar. So if you see dollar strong, you see GPP tiny. If you go and sell, you're on your own. That's true. So make your chart so clean. No ambiguity, no confusion. Just mark your zone, understand what you are doing. And then look for your entry. Like as gold is dropping now, you already know that you are waiting. You are waiting for price to come here. Once it comes here, what you are looking for, okay, is resting on moving average, 100. It has given me, it has rejected here. It's giving me a bullish candlestick. It's already doing something like this. Okay, so this is that line. It's dropping now. So it got here now, it rejected. Then suddenly it's doing something like this. Green. That's bullish candlestick. It's using that moving average as support. Something tells me that, okay, this is a confluence. Confluence 1, indicator 1, indicator 2, indicator 3. And then maybe you already took out a small lower high somewhere here. Confirmation 4, then you enter. You put your stop loss here. TP. Now so trade B. Sir? No, it's available, but the spread is too much. That's why they trade only gold. Most people trade only gold USD. The reason why the spread of gold too is becoming tighter these days is because a lot of people are now trading it. Before, gold spread too was big. Do you understand? So all those other assets that their spread is wide is because more people are not trading it. Yes. Any other question? Okay, in the absence of none, I think we are done for today. So look for your trade on gold, and then let's see what the result will be.